Hello guys, welcome to Career Compass. This is Dipan Ghataliya, your tutor for taxation as well as the SBL paper of ACCA. Now, let's start with the fourth chapter of our rapid revision series. First of all, let's start with the computation, employment income computation pro forma students. Here you can see on the screen that first of all we have taken up all the kinds of the cash earnings like salary, bonus, commissions, cash vouchers, benefits, cash benefits and everything. Then after students, we have taken up the other taxable benefits. Now what does it mean by other taxable benefits? Other taxable benefits are nothing but all the kinds of the non-cash benefits that you have received from your employer. Once you make the total of all the cash as well as the non-cash benefits, then after you will be allowed to deduct all the kinds of the allowable deductions. Now let's see that which are the allowable deductions that we can claim under the employment income. The first allowable deduction, students, you can see over here is the qualifying travel allowance. It's nothing but if you have traveled for the employment reason and during the whole travel journey, if you have incurred any expenditures, then you can claim the deduction for that travel allowance. Why you can claim the deduction, students? It's very simple that as let's say suppose you incurred the expenditure of £2,000. Now your employer may have given you that £2,000 in the cash, but that cash £2,000 that you have received in the form of salary or something like that, students, that is not basically your earning. Obviously students, it's just a reimbursement your employer is giving to you. So technically if you see the pro forma, the whatever cash payment that you will receive from your employer will be considered as a salary. But students, basically the travel allowance have been paid to you by the employer is not your part of the salary, should not be taxed. So that is why we are eliminating any kind of the travel allowance you have received from your employer by separately allowing it from allowable deductions. Then after students, the fees and subscription to professional bodies, simple, it's subscription fees paid to ACCA or any other bodies like that. Then after students, gift aid donations are there, but please remember it's an donation that they are allowing, but it should be under the payroll deduction scheme. Now what does it mean by payroll deduction scheme, students? If you have already told your employer to deduct the donation amount, a fixed donation amount from your salary, and on your behalf of if your employer is paying any kind of the donation under payroll deduction scheme, then that particular donation will only be allowed to be deducted from this pro forma. Now you will tell me that, sir, what if our donation amount is not under the payroll deduction scheme? Now you already know, students, if it's a general donation you have made, then it will give rise to the extension of the band. Then after you can see over here cost of any shares acquired in the SIP. Now once again it's the advanced taxation concept. Then after contribution to occupational pension scheme, students, over here you are getting the deduction of only and only occupational scheme. Please remember, any kind of personal pension contribution made will not be allowed as a deduction from here. Then after students, capital allowance also is there and approved mileage allowance are there. Now students, let's understand the approved mileage allowance in detail. Now if you see the approved mileage allowance, students, it's nothing but if you have used your own car for the employment purpose, then your employer will going to reimburse you with certain kind of the reimbursement, right? So let's say suppose your employer have paid you, let's say suppose the £5,000. Now that £5,000 that you have got is nothing but it's a reimbursement for the car that you have used for your job reason. The car was your own personal car. Your personal car have been used for the job reason. So I don't think that is any kind of benefit is there, or that I don't think there is any kind of earning you are getting. It's a simple reimbursement just like the qualifying travel allowance. But students, the tricky part over here is that if your employer is giving you the £5,000, okay, now that £5,000 is according to the employer's rules and everything. It's your company's policy that how much you should be reimbursed according to how much miles you have drawn. But that is the according to a company's policy. Now over here, students, HMRC have published a simple table to calculate your standard reimbursement, which will give you the standard amount that you should get from your employer. Now let's say you should get, according to the HMRC's rule, you should get £4,000, and actually you are getting the £5,000. So that means that you are getting the £1,000 extra over and above the standard amount given by the HMRC. Okay, so whatever excess amount that you are getting over and above the standard amount will give rise to the taxable benefit. Yes, students, once again let me clarify that approved mileage allowance can be possible that it can give rise to taxable benefit, or it can be there under the approved allowable deduction also. So it can be anywhere, students, depending on the how much amount you are getting from your employer. And if you are getting the lesser amount, let's say suppose you are getting just 2500 as a reimbursement from your employer. So whatever the lesser amount, whatever is the gap, students, which is there of £1,500 will be allowed as an allowable deductions. Now students, now your simple question will be, students, how to calculate the HMRC standard amount. Students, for that you can see on the screen now that there is a different kinds of the rates given. For the car and van there is a rates of £0.45 and £0.25, students. Then after for motorcycle there is a different rate, cycle there is a different rate, students. But whatever rates that you can see over here, it's a per mile rate. So to calculate HMRC standard amount, students, you have to multiply these rates by the number of miles you have drawn. Okay, so I hope you are getting this point. If you are having any kind of the query, students, feel free to ask. Okay, now we are moving towards the next topic, which is the receipt basis rule. Now this is nothing but a very simple thing, students. Most of the time in the practical world, it may happen that your payment date and your salary's due date can be the different. So it may be possible that, let's say suppose the March month's salary will become obviously due on 31st March. Okay, but it is actually being paid on 8th of April. Okay, and that is the company's policy. Now students, the important thing is that as you are getting your salary on 8th April, but it was due already on the 31st March. Now that March month's salary will become taxable under which particular tax year? That is the biggest question over here, and that is why the receipt basis rule have been given by the HMRC. It will guide you that which date you should consider. So the simple thing is that, students, whatever date is the earlier date for all the employees, students, whatever date is the earlier date, that earlier date will become your earnings date. It will be considered, and we will assume that on that particular date, the earlier date, you have got your salary, whether it can be the due date or whether it can be the payment date also. Okay. Then after, students, if you are talking about the directors, then there is a separate rules given by the HMRC for the directors, because the HMRC thinks that directors are at that position that they can manipulate, they can change, they can, students, influence this payment date, entitlement date, just to students save their tax payment, just to save their tax liability. Okay, so that is why there is a little bit of complex kind of the rules are given by the HMRC. Their earnings date will be the earlier of, students, payment date, entitlement date, whenever the amount recorded as a liability in the company's account, that those three dates are there. Then after, students, fourth date will be determined separately. It will be the later of year-end date and the determination date. Now exactly, if you see, the director's salary will generally be determined at the annual general meeting of the shareholders. The next concept is, students, the important exempt benefits. Now if you see the Kaplan, students, if you see any other material, you will find a bunch of exempt benefits list. But right now, students, it's not possible for us to go through all the exempt benefits, students. That's why temporarily I have listed out some 8 to 10 exempt benefit for you over here in the screen, which you can read, students, and which you can mug up for the examination. And these important exempt benefits are according to my opinion, students. So I would request you to pause this video and one by one read all the exempt benefits perfectly. Now, students, now let's talk about the next concept, which is the taxable benefits. Students, taxable benefits are lots of taxable benefits we will going to learn. But students, one thing you should remember that generally how the taxable benefit will going to be calculated. Students, it's nothing but a very simple rule we will going to follow, and that is nothing but the whatever cost have been incurred by the employer while providing that benefit. According to that logic, according to that cost to employer logic, we will going to calculate our taxable benefit amount. Okay, so the logic of whole taxable benefit amount calculation and everything will be the cost to employer majority of the time. Okay, but students, let's start one by one all the kinds of the taxable benefits. Now the first taxable benefit is the living accommodation, students. If you can see over here, students, in the screen, you will find one pro forma that first of all, you have to take the annual value. Now annual value will be given in the examination, you don't need to worry, but that annual value is nothing but the market value of the rent that property should get, that property should be paid throughout the year. Okay, its annual value is the market value of rent. It's not the whole market value of the whole property. We are not going to purchase the whole property, but let's say if we rent out, or let's say if we take up that property on a rent basis or on a lease, then how much rent we will have to pay. So that annual rental amount will be taken up first of all. Then after, you have to add the additional benefit, but that additional benefit will only and only come if your cost of accommodation given in the question is more than £75,000. Then after, you have to deduct the two major deduction, which is the reduction for the unavailability, which is the most common deduction, students. If let's say suppose you have used that property for 6 months only, then you have to time apportion your taxable benefits. And then after, the contribution by employee also, if you contributed some of the amount of students to your employer, that should be deducted. Remaining amount will only and only become your taxable benefit. Now students, let's see that how to calculate the additional benefits, students. Now additional benefit amount is dependent on your purchase date and the provision date. That means that when exactly your employer have purchased that particular property, and at what particular date that property have been provided to you, you have to first of all find the difference. What exactly is the difference between purchase date and the provision date? Let's say the property was purchased in the year of 2015 and the property have been provided to you for the use in the year of 2019. So if the gap between purchase date and provision date is less than 6 years, then the pro forma will start with the purchase price, because the gap or gap between purchase date and the provision date is lesser than 6 years, and it's a very short duration is that it's a very short gap is there, and you can say that you just recently purchased this property. Then after, you have to add any kind of capital improvement instruments, but before 6th April 2020. Then after, you have to deduct the fixed amount, and then you will get your additional benefit. But let's say suppose your purchase price is, let's say suppose £100,000, you have deducted the fixed amount of 75,000. So your additional benefit will come up as in £25,000. But that 25,000 is not your additional benefit, students. That 25,000 is just a kind of amount. That £25,000 should be multiplied with 2.25%. Additional benefit will arise at the percentage of 2.25%, students. Please remember that. Okay. So lots of students makes most mistakes over here. Now if let's say suppose the gap is more than 6 years, then what will happen, students? You can see the pro forma and you have to mug up the pro forma. The only difference you can see over here is that in the previous pro forma, the pro forma started with the purchase price. Over here we are taking up the market value at a provision date. Then after, the other things are like kind of easy things, or the similar kind of the things are there. So I hope, students, that you good to know how to calculate the additional benefit. Now your question should come up that, sir, what will happen if our employer do not have any owned property, but employer have rented the property and then have given us for the usage purpose? Then in that situation, students, if the accommodation provided to us is rented by employer, then it will be taxable according to the higher amount of rent actually paid by employer and the annual value. In the case of students rented property, there will be no additional benefit, please remember. And you have to also, students, let me revise you that any kind of the job related accommodations are always being exempted. So job related accommodation, if you see in the question, it will be exempted. Then after, students, what will happen if you have been reimbursed or any kind of expenses connected to the living accommodation will become taxable benefit. Okay, but if let's say suppose that accommodation is a job related, then the taxable limit is the 10% of employment income. That is the important rule to remember, students. Then after, the next benefit is the car benefit, students. You know already that there are two types of the car, the pool car and the not a pool car. The pool car, if you are having, then it will become the exempt benefit. But if it is not a pool car, students, then you have to prepare one pro forma. And here you can see, students, that there is one pro forma adjusted list price that will be given in the examination, and if not given, then don't worry, I will teach you how to calculate adjusted list price. But that adjusted list price multiplied by CO2 emission rate. Now students, once again, if you don't know CO2 emission rate percentage and if you don't know how to calculate it, then you please message me personally. I will give you the whole detailed video of calculation of CO2 emission percentage. And yes, you can message me, I will guide you, I will share one video, but right now it's not possible to teach that aspect in detail. But students, I hope that you know already. Once you do that, then after there is one simple two deductions are there: non-availability deduction and contribution deduction. And finally you will get your car benefit amount. Now how to calculate your adjusted list price? Once again, there is a pro forma given over here, students. You can see the list price plus cost to employer for any additional accessories and any capital contribution. Please remember over here the capital contribution, students. In the previous pro forma, the contribution that we have seen, that was contribution for using the car, but over here the capital contribution means for purchasing the car. Any kind of capital contribution you made, that should be deducted from here. So you have to mug up both the pro forma, students, perfectly word by word. But that capital contribution deduction is having the maximum limit of the £5,000. Okay, so I hope you are getting this point. Now students, another point which you have to remember, that no extra benefit will arise for insurance, maintenance, repair, running cost, because every other motoring expense kind of the things are included already over here. So if your employer is providing you for insurance, maintenance, repairs, no need to worry, no separate benefit will arise. But if you are being given a separate driver, then that driver's cost will create additional taxable benefit. Okay. Now then after, students, the next benefit is the fuel benefit. Fuel benefit is very simple, students. Fuel benefit is equal to 24,500 which is the fixed amount, and you have to multiply it with CO2 emission percentage. Now only thing that you have to remember in the fuel benefit is that, students, you can get the deduction of the like unavailability, but you cannot claim the deduction for the contribution made by employee. The next benefit is the VAN benefit, students. VAN benefit is very simple. It's a simple per annum amount. You can see over here, it's a 3.90 pound per annum amount is there. And if you are being provided with the fuel also, additional fuel also, then the separate taxable benefit will arise, and that is the 666 pound per annum. Okay. Now both the fuel benefit and VAN benefit will be divided equally if that fuel or the VAN is being used by more than one employee. Okay. Then after, students, the next concept is, students, the use of asset. Now use of the asset, what does it mean by use of asset, students? Now students, whatever benefit that we have seen, that is the car benefit, VAN benefit, accommodation benefit, fuel benefit, these all the four benefits were having their own separate set of rules. But let's say suppose your employer have provided you with some kind of the laptop or some other kinds of the asset is provided to you by your employer. Now which rule you will follow? Okay, how you will going to calculate your taxable benefit? So that is why this concept will help you. Now how to calculate taxable benefit over here? It will be higher of, first of all, the 20% of the market value when provided, and yes, if it is not used full for the whole year, you have to reduce it. And then after, the second amount is the rent paid by the employer. Now whatever will be the higher amount, students, it will become taxable. So I hope you are getting this. Now let's come to the next aspect, which is the gift of asset. The first is the gift of asset, and there the gift of asset, students. If your employer is providing you the totally new kind of the asset, then the taxable benefit will be nothing but it will be the cost to employer, because it's just a new asset have been purchased by employer. So whatever cost have been incurred by employer will become taxable benefit for you. But if your employer is giving you the second hand asset, then the taxable benefit will be, students, market value when gifted. Okay, so it's a simple market value, students, because it's a second hand asset. That's why. Then after, students, if the third scenario is that let's say suppose you have been provided that asset previously for use and then subsequently gifted to you. Okay, now in that case, students, the tax treatment is little bit different, students. You have to take a higher of the two different options. There are two options, students, the option 1 and option 2. You can see over here in the screen that both the option is having their own pro forma. Now basically, students, generally if you see, most of the students usually used to mug up this both the formula, both the pro formas, and then apply this pro forma in the examination. I don't have an issue with this pro forma, but my methodology of teaching is that I recommend the students to mug up less and less rules and provide more and more logic to the rules, so that in the examination you can easily apply these rules on the basis of the logic only. But right now, basically if you see, students, there is no explanation to this pro forma, and you just have to mug up simply. Okay, so now let's move toward the next concept, which is the beneficial loan, students. Beneficial loan is very simple, students. Beneficial loan is nothing if your employer is providing you any kind of the loan, but the loan provision is not the benefit amount. The benefit is not on the loan, because if you see, if you want the loan, there are lots of financial institutions are there in the market which can provide you the loan. So that is not the big deal you are getting from your employer. The important thing over here is that if you are getting the loan at a lesser interest rate, then that can create a benefit amount. Okay, so over here HMRC is saying that the standard interest rate in the UK is 2.25%. If you are getting the loan at a lesser percentage, or if you are getting the loan at just like 1% or 2% or 1.5%, then that can create a taxable benefit. So that's why it's a very simple taxable benefit. In this case will be very simple: interest expense as per the HMRC and less interest expense actually you have paid. Whatever the difference is there, whatever the benefit that you have got in terms of the interest expense will become your taxable benefit. But the most important thing that you have to understand over here is that if the loan amount is less than or equal to £10,000, then simply it will be treated as a small loan and it will become exempt. Now if you see, students, this whole pro forma, students, there is interest expenditure amount you can see, but the interest expenditure amount may not be given you directly in the examination. So that is why, students, in the examination, if they have told you that you have to calculate the interest expenditure according to the average method, then according to you have to calculate it. And if they have given you told you to calculate according to the precise method, then you have to calculate accordingly. Okay, if they have not mentioned anything, then you have to calculate in both according to both the method, please remember. Okay, so you should know that what is the average method of calculating the interest and what is the precise method of calculating the interest. Okay, students, so here we are done with this employment income concepts chapter, students. But if you are having any query, feel free to ask. See you, students. Bye.